Morning, Vuyo.
Morning, David. How are you?
Let's look at that rand. It's down to 8.15 or so this morning. It was 8.23 towards the end of the week, Thursday, and then down to 8.19. So a strengthening trend there?
Yes, absolutely. I mean, the rand kind of started off on a shaky foot last week, but then on Thursday we had these comments by ECB head Draghi, and it was followed up also by comments by the German leader Angela Merkel and Mr. Hollande from France, to the effect that they would do whatever it would take to keep the euro area intact and lend support to the common currency. And of course, you see the euro rallied, quite a substantial rally also in risk assets, and the rand, of course, riding that crest. So it came down quite sharply towards the end of last week, and certainly still seems to be on the front foot this morning. We do have some central bank meetings coming up this week, and it does seem that the market has positioned or is poised for either allusions to further quantitative easing on the behalf of the US Fed, or the possibility of some further support coming through from the ECB. So risk on mood at the moment, quite a bit of optimism through the market, and you're certainly seeing that reflected in the currency.
Yeah, also the Bank of England, an interest rate announcement, whether it does something or not, there is an announcement, that and the ECB on Thursday. Then the Reserve Bank's just issued, we saw it on the news a bit earlier, credit and money supply data. The numbers there around 8% increases.
Yeah, I mean, certainly quite an encouraging number. You haven't seen the rand react to that quite substantially, but of course that's because our MPC meeting has just occurred, and the next one is still some months away. So as far as expectations of rate changes, for instance, or where the economy is going, I don't think that the credit data or this single set of numbers is probably not going to have a big impact. But all in all, quite a further increase seen in money supply and credit extension, and so evidence that the economy certainly isn't falling off a cliff, but again very far from the healthy levels that we've seen in the past, and levels that we'd like to see going forward. So it does confirm our belief that GDP growth is likely to slow this year. We've revised our expectations in terms of GDP growth downwards for this year, so we're now seeing growth coming in closer to a 2.5% relative to the 2.8% that we were sitting at the beginning of the year.
Other indicators coming out this week, we're seldom short of these numbers coming out. PMI on Wednesday, we've got trade data from SARS tomorrow, and the new vehicle sales on Thursday.
Yes, absolutely. So it's quite a busy data week for South Africa. I do think that the standout number is likely to be the PMI, particularly where markets are concerned, and that's because it lends itself to easy comparability, given that the PMI is being issued from most of the world's leading economies. So the 1st of August is certainly going to be quite a big day as far as the insight into global growth is concerned. Locally, we're expecting a further decline in the PMI. As I said, we've already adjusted our forecast for this year downwards, and so we'd expect to see that real economy numbers continue to lose steam as we head into the second quarter of the year. But of course, all eyes are going to be on what's happening to those international PMIs, particularly China, the US, and the Eurozone.